Mela, let us continue from where we stopped when it comes to financial statements, ordinary share capital, and retained income. Today, I will be discussing dividends. And the biggest question is, what are dividends? Please note that dividends are returns to the shareholders for their investment in the business. Remember, to be a shareholder, you need to have bought shares from the business. And as a remuneration for having bought shares in that business, you will get a return in the form of dividends. Dividends are calculated as a percentage in cents of the number of shares issued, highlight issued, or as a percentage of share capital. So when you calculate your dividends, it's always the number of shares issued times your dividend price per share. Now, let's discuss the declaration of dividends. Now, before we can declare dividends, please note that a company must make sure that it has met liquidity and solvency ratio. Liquidity is the company's ability to settle its short-term debts, and solvency, it is the company's ability to settle all its debts. I mean, mostly it's long-term debts, because if you can't settle long-term debts, it means you can't settle all your debts. Once the company declares dividends, it is obligated to pay those dividends. It's under obligation to pay those dividends. Now, what type of dividends do we have? We've got interim dividends, and interim dividends are dividends that are declared and paid by the company during the financial year. They're declared and paid. What else? Final dividends are dividends that are declared but they're not paid. So meaning that final dividends, we are going to classify them as current liabilities because they were just declared, they were not paid. And we've got dividends on ordinary shares. What are dividends on ordinary shares? Please note that dividends on ordinary shares are simply dividends declared during the year. And the company declares two types of dividends, which is interim and final dividends. Please note that if you are given dividends on ordinary shares in your pre-adjustment trial balance, please note that those dividends will be your interim dividends. I repeat, if you are given dividends on ordinary shares, sometimes they write it as dividends, sometimes they write it as dividends paid, sometimes they write it as interim dividends, sometimes they just write it as dividends on ordinary shares. As long as you see that in the pre-adjustment trial balance, note that that will be your interim dividends. Those are the dividends that you have paid, which are your interim dividends. Then we've got what we call retained income. What is retained income? Retained income is just unused profits that will be used in the future to pay dividends and tax. These are accumulated amounts of profits that the company has not used over the years since its inception. Let us look at this question here. We have Veritas Limited was founded on the 1st of March 2018. Its financial year runs from March until February. Veritas Limited has 5 million authorized shares as stated in its memorandum of incorporation. And we've got share capital, which is made up, and these are the balances on the 1st of March 2019. We've got share capital of 2 million, which is made up of 600,000 shares. And the retained income at the beginning of the year, I'm assuming that is the beginning of the year, was 500,000. Now let us read transactions. And the share that says that the company issued 500,000 shares on the 1st of April 2019 for 250 cents per share. Please note that that information will be recorded in my ordinary share capital. And I will start by authorized, obviously, but I will start with that 600,000. And the share capital from that 600,000 was 2 million because that is the beginning of the financial year. Then we issued, as I've said, 500,000 shares. And these 500,000 shares that we issued, they were issued in April. And that increases our share capital. And they gave you the share price. The share price there was 250 cents. When I record it in my ordinary share capital, I will write it as 500,000, 250 cents, which is the same as taking that 250, dividing it by 100 to get your cents in rands. To get my share capital, I'll take 500,000 times 250 divided by 100. That'll give me 1,250,000. Then it says the company received R1,000,000 for shares issued on the 30th of January 2022. These shares were issued at R5 per share. They didn't give us the number of shares there. They just gave us the share capital that we received. To get the number of shares, you will take the share capital of 1,000,000 and just divide it by 5. It'll give you 200,000 as the number of shares, which we issued at R5, and that'll give us a share capital of R1,000,000. To get the number of shares issued at the end of the year, I'll just add the number of shares. 600,000 plus 500,000 plus 200,000 will give me 1,300,000. 2 million plus 1,250,000 plus 1 million will give me 4,250,000. That's it. Now, under dividends, it says the company declared interim dividends of 60 cents per share on the 30th of June 2019. When it comes to the declaration of dividends, please note that dividends will be recorded in your retained income. And in my retained income, I am going to start with the balance at the beginning of the year, which was 500,000. And after your balance at the beginning of the year, you will have net profit after tax, which we don't have information about so far. And then you'll put in a loss or profit due to buyback. I gave you the formula on how to calculate that. For now, there were no shares that were bought back, so I'll just put it as 0. And then you'll have dividends on ordinary shares. Under dividends on ordinary shares, there are 2 types of dividends under dividends on ordinary shares, which will be your interim dividends, i.e. sometimes they write it as paid. Now, for me to determine these interim dividends, I needed to draw my timeline, which is my financial year. My financial year starts on the 1st of March 2019. And on the 1st of March 2019, there were 600,000 shares that were issued. The next day will be the 1st of April. Please note that we only declared dividends on the 30th of June. But you will notice that on the 1st of April, we issued more shares amounting to 500,000. And then we declared dividends in June. But by June, how many shares were issued? Remember how we calculate dividends? You use this formula here. It is number of shares issued times dividends price per share. You need to ask yourself, when we declared interim dividends, how many shares were issued in total? We had 600,000 at the beginning of the year. We issued more shares on the 1st of April worth 500,000, meaning that by April, shares issued amounted to 1,100,000. And these are shares that were in issue when we declared our interim dividends, when we declared and paid our interim dividends on the 30th of June. So to get our dividends on the 30th of June, we will just take 1,100,000 times it by 60 and divide it by 100. It'll give us 660,000, which will be our interim dividends. Under dividends, it says the company declared final dividends of 40 cents per share on the 28th of February 2020. Shareholders who bought shares on the 30th of January do not qualify for final dividends. So those shareholders that bought, we're not there yet. But anyway, let me just continue. We declared dividends right at the end of the year, right? But between June and the end of the year, We issued more shares, which amounted to 200,000 in January. Now, that will increase the number of shares issued from 1,100,000 to 1,300,000. Now, by the time we declared final dividends, we had 1,300,000 shares issued, which is the 28th of February. But can I calculate dividends on that 1,300,000? The answer is no. Why no? Because of this. So that 1,300,000 include shareholders that bought shares on the 30th of January. So these shareholders do not qualify for final dividends. So when we calculate final dividends on the 28th of February 2020, we need to exclude those shareholders. So we will still use 1,100,000 to calculate our final dividends, which will be 40 divided by 100. That will give us 440,000 as our final dividends. Add them with your interim dividends to get your dividends on ordinary shares. Put that in brackets, which will be 1,100,000. How did I get that 1,100,000? It is 660,000 plus 440,000. Now, the last part, they gave us profit before tax, which is 1,500,000, but they gave us a tax rate of 28%. It will start with profit before tax will always be at 100%. Tax here is at 28%, meaning that profit after tax will be at 72. So if I want my profit after tax, you multiply by what you want, you divide by what you have. We've got profit before tax, which is 1,500,000. That 1,500,000 is at 100. But we want profit after tax. So I'm going to take that 1,500,000 multiplied by 72, which is profit after tax, and divided by 100, which is profit before tax. And this will give me my profit after tax amounting to 1,080,000. Now take your retained income balance at the beginning of the year of 500,000, add it with 1,080,000, and subtract 1,100,000, which is your dividends on ordinary shares. You will end up with balance on the 28th of Feb 2020 amounting to 480,000. That 480,000 represents retained income or profits that were not used and will be used in the future to pay dividends as well as tax. Please note that your final dividends, we are going to record them in trade and other payables as shareholders for dividends, and that will be 440,000. Why do we record final dividends here? It is because shareholders for dividends are final dividends that have not been declared, that have been declared, but have not yet been paid. Therefore, we are creating a liability that will only be paid in the next financial year. And that's why we include it under trade and other payables, because that is a current liability. Try classwork 5, which is this over here. Use that to prepare this. And that. As well as that. You can also try out classwork. Let me just give you answers to classwork 5, because classwork 5 is pretty much the same as the example we just did now. Except here, for final dividends, they didn't say anything about shareholders that will not qualify. So you will only look at the number of shares that were issued on that specific day when those dividends were declared. You'll notice here, by the time we declared final dividends, 1 million shares were issued. Because they said no, they said nothing about anybody that will not qualify for final dividends or anything. You just use the number of shares that were issued when final dividends were declared. Try out classwork 6. Use that to record the transactions here. And here. And check out the next video for solutions. Khotso.